We're here on the pound dollar, currently on the 240, and we have an alternate flag which I've just got in. I'm going to run through the rules to it, and also the fact that we do have a double bottom within the wicks as well. So let's look at the high time frame analysis. Got quite a nice reward to risk here because of that double bottom. So let's go out to the dailies. You're going to have to excuse my charts. They are running very, very slow for some reason. Every time I move, they're not moving as they should. They tend to be sticking. So last week I was talking about this trend line just here, and I was actually talking to somebody within the tier 1 syndicate because a lot of people were looking at shorting as a result of this that would violate it to the downside. Well, this pattern can break out in either direction, and this person in the tier 1 syndicate just said to me, why are you looking at buying the market up and not selling it because of this break below, close below the structure level? And I said, well, I'm going to wait for more confirmation, but look at what we have. Here we have resistance, and if we move this up a little bit, then yes, we do have a little bit more resistance here, structure that's been violated. I said, but look at all the structure level here that's being violated, and because this structure level is more important to me than this structure level because it's been tested more times, then because we've broken above it, I would look for a small pullback and a chance to get long if the appropriate situation came along and it met the rules. Well, we've broken now above that, and we've actually come into this structure level just here. So I'm going to go ahead here and drop to the 240, and what we've got now is we've got a nice 3-point move. There's 1, 2, 3. However, we have only just violated this level of structure, and we are now back up into this level of structure. So playing for any continuation here to the upside is not something I'm interested in, even though I think that we could go higher, but what I think and what the chart tells me are two different things. So right now we're at structure, and what we've done here is we have seen a retracement, and where have we seen that retracement to? And it is within the wicks, which is the first chance entry, and whenever we're moving very directionally or in trend, typically I look within the wicks, because if we move very directionally like we are doing here, look at all the buying pressure in this pole, then we would see a small retracement, usually into the wicks before the continuation on up. Now there's nothing here as yet on the 240, but as we go down to the 60, this is a valid trade for me, and some of you that have been following me for quite a while will know that I do take something called an alternate flag, and it's something I came across in my back testing. So we have a very directional pole, or multiple candles which are very directional, but then we do not adhere to the two touches on either side. And what we tend to see is that usually we have the candles around 80 to 90% of the same color bearish. So you can see the majority of the candles here are bearish, particularly the big ones, and all we wait for is the breakout. Now you can see that we've had the breakout within this highlighted area, which is the wicks. That's a good sign. But if we drop down another time frame, time and time again with these alternate flag patterns, we do see a double bottom which occurs just before the breakout. Now I've only just got back, so I've only just come across this now, been out for a few hours, but I would not have I was going to say I would not have been able to get my entry because the RSI didn't go oversold, but ignore that. This is a pound pair, so I can take the RSI from 70, and the RSI went oversold at 22.65. so sorry, I can take it from 30. So this would have been a valid double bottom if I was around a couple of hours ago. I'm not, but the good thing about being a little bit late in this scenario is that we have now violated the B point, and that means that we've got this confirmed as a double bottom. So you can either now wait for a small pullback like this into that 61.8 fib for a 26.18, or you can just simply buy the market up now and wait until we go higher and look for that retest. So I'm going to go back to the 60, which is the time frame that the pattern is on, and targets are a retest of the highs only. Because this particular pattern I'd never play for extensions, I only play for a retest of the candle closes minus a few pips. So if I bring back on the orders, that's exactly what we've got. And in terms then of the risk, well, I've actually gone 10 pips below that 15-minute double bottom, which was at full ATR. And then in terms of the reward, 67 and 32 of risk, so a lovely 2-to-1 reward risk there. Very high probability trade. We've got a 3-point move, we've got a retracement into the wicks, we've got the 15-minute double bottom, and we've already broken above the B point, so a very nice opportunity here. We're back for the update, and this is repetitive. All I'm doing at the minute is videos for losing trades. This is another one. These are very high probability trades for me, 70 to 80% win rate for me. Look, you can see that here on the hourly we came down and made a double bottom, not just on the 15 like the first part of the video, but at here we then made another double bottom. We had the break above, close above, and drop. We just dropped and it was taken out there for minus 32 pips.